Ministry of Finance. We are honored to have you with us today, sir. We are also joined by Mr. Vijay Chandok, co-chair of FICCI's National Committee on Capital Markets and MD and CEO of ICICI Securities, and Mr. Sayantan Dutta, partner, Shardul, Amarchand, Mangaldas and Company. I now request Mr. Chandok to introduce our chief guest for the session and also present our green gift of trees to Mr. Pandey. But before I hand over, I would request participants to type in their questions in the chat box. Over to you, Mr. Chandok.
Thank you very much. A very good afternoon to all the viewers, ladies and gentlemen, and all the distinguished guests who are here on the panel. Super excited to have a special guest for this session, and I'm sure this is going to be an interesting discussion. Of course, Mr. Tuhin Kanta Pandey needs no introduction. Everyone knows he's the Secretary Department of Public Asset Management, DIPAM, Ministry of Finance. He has held many important positions with the government and Government of India, Government of Orissa, and he's also served in the regional office of the United Nations Industrial Development Organizations. Mr. Pandey has wide exposure in the areas of economy, finance, industrial development, tax administration, and he's been truly instrumental in bringing several policies, innovations into the departments that he has served. Now, coming to his current role and with regards to what he's doing at DIPAM, I personally got an opportunity to work for him, and having seen him at close quarters, I think I would be failing in my job if I do not say a few things about what we've observed while doing work for him. So since the time that he took the role, I think it would be fair to say that some of the easier part of the disinvestment was already done. And when he started off, there was this agenda of the government, which was quite clearly pointing to minimum government and maximum governance. And that agenda had to be driven. And to drive this agenda, we could clearly see some very, very clean, organized thinking and a framework being brought into place along with Niti Aayog. And I must also say that, we have to credit him completely for the kind of conceptualization of the asset monetization program and, putting that in motion. It's completely been spearheaded by him and in such a complex and a unique proposition that has been brought. Also, under his leadership, some of the most notable disinvestments has happened. Everyone is aware of the big one at the Air India, which had certainly grabbed all the headlines. It was a very, very complex disinvestment. It's been in the works for so many years, but it all happened when he got it together. Apart from this, of course, he had put through transactions like NEEPCO, Dairy Hydroelectric Corporation, Kamarajar Port, just to name a few. And if I were to stack up all these transactions, they actually are in the excess of 75,000 rupees that have been netted to the government exchequer. Of course, Secretary has also driven the IPOs of very notable IPOs like the ones that we saw, IRFC, RailTel, and of course, you can't forget the biggest of them all, the LIC IPO, which had happened in very, very difficult circumstances under the backdrop of the Russia-Ukraine conflict. So under tough market conditions, Secretary DIPAM has done a commendable job, and we are excited to have you here, sir. We welcome you for this session. We extend a green gift of trees, which has been planted in your name in Sundarbans in West Bengal. Thank you so much for accepting our invitation, sir. Can we request you, sir, to give your opening address?
Thank you very much, FICCI, for inviting me to this very important CAPAM conference 2022. I clearly recall I had last addressed the last CAPAM in July last year. And since then, many developments have taken place, and I thought we should, of course, you are largely aware of them, but it will be good to recall. Just to, the context is, just to put it in context, Indian capital markets, they continue to actually strengthen and deepen at a fast pace. Number of demat accounts, as you're aware, they've crossed 100 million, and they're 3 times since 2018-19. During 21-22 alone, there was addition of the about 35 million demat accounts. Also, I think LIC IPO also played a role, as several people actually, because of the retail, the policyholders window had opened the demat account as well. And many of them were first-time dematers. The total investments in mutual funds has now gone up 6 times in last 10 years. And retail, HNI, and domestic mutual funds put together, they constitute about more than 17% in the listed companies as of March 31, 2022. So obviously, the listing of companies has been one of the most important objectives of government policy. And it is not only from the point of view of disinvestment receipts, but from the point of view of the transparency that it brings about, the corporate governance, the market orientation that is added to the functioning of the government companies, as well as broadening and deepening capital markets. 17 companies have been listed since 2015, since this government came into power. And this has been more than 50,000 crores has been raised, drawing about 6 million retail investors, creating more than 7 trillion rupees worth of listing market cap, which is about $92 billion. LIC IPO, as you know, May 22 was the largest IPO and could be pulled through with a lot of teamwork. And I at that time commented through, sort of Atmanirbhar Bharat as an example of Atmanirbhar Bharat. Yeah, there were, huge challenges, the size. This was an organization which predated the regulator itself. It had a separate legislation. There was a capital structure had to be reorganized. Governance system had to be, corporate governance has to be completely overhauled. Embedded value determination had to be done for that. I think the core software itself needed to be changed, and more than 250 million policies had to go through the new grill, the new accounting grill. As you know, that insurance is extremely sort of number crunching is involved there with the long-term implications of policies and so on. And on top of it, we had twin crises. One was the Ukraine crisis, and the second one was multiple central banks were, looking at the inflation with renewed urgency, and therefore we knew that we had this huge FPI withdrawal from Indian markets. But again, thanks to the resilience of Indian capital markets, such a largest IPO could be pulled through under those trying circumstances. It was a great example of teamwork and massive upgradation of capital market infrastructure, including technical infrastructure, the way we could deal with the millions of shareholders without glitches, and the whole payment ecosystem was also reorganized. Additionally, because there's a UPI system now is in place, and millions of probably 30 lakh emails were actually issued in 1 hour of allotment. The allotment process went almost glitchless. So this was also a good testing time for how the capability of our entire ecosystem, because a policyholder window had to be created and all the bidder platforms that had to be bringing in. So a lot of changes had to take place. And if you say that we had taken a cabinet approval in July 2021, and we could have the IPO in May 2022. So I think there was quite a bit of teamwork, massive amount of work, which LIC officers, their management also did, and so did the merchant bankers, the legal advisors, and so on. Going forward, LIC is taking a number of steps, initiatives. It's an important from the point of view of, is that LIC IPO was the only objective, or are we really looking at? Because as we said, that our thing is a corporate governance transformation. Such a large financial institution had to be brought in at a very mature stage, and obviously we had to have to address these challenges. The management is addressing the post-listing initiatives. For example, re-engineering process to improve the 13-month and 25th month persistency, where LIC has been relatively less than its peers. Then bringing new professionals in the areas, like, for example, investment relations. There's a chief development officer post which has been advertised. There's a chief technical officer post which has been organized. Improving employees' productivity, cash management, looking into the actuarial valuation more in line with industrial practice, and regular IEV disclosures, Indian embedded value disclosures. And I think from going forward, the LIC has announced that the September results, and the September results will be announced, I think, along with that H1 IEV will be announced as well. There is also an added important issue of improving non-par par mix, so that their portfolio is more rounded, their insurance portfolio is more rounded. Now, I would also like to, in this context of listing and capital management, I would like to also just bring it to attention another important initiative, Bharat Bond ETF, which is nothing to do with disinvestment per se, but has played an important role in the capital market, deepening of bond market, because it was first seeded in DIPAM and launched in December 2019. And since then, we had 3 tranches already. And significantly, there has been several private bond ETF which have come. And that was actually the objective, that we bring about a product in close cooperation with SEBI, work out sort of model and develop the product ecosystem. And then, of course, there are others who can join in. And I believe several other bond ETFs drawing on state development loans or the corporate bonds, or even GSECs, they have come into being. And the cumulative AUM of bond ETF market has gone up to 63,000 crore, of which 78% is accounted for the Bharat Bond ETF. So this was just what I'm saying is that these are the kind of things actually needed on the bond market. I think a greater amount of activity is required for deepening of bond market. And I'm sure that all the different players, market players, and the regulators are onto it. Let me now briefly come to a very important pillar of our policy, which is the strategic disinvestment. Now, strategic disinvestment, also by way of privatization, is one of the important objectives of, has been one of the important objectives of the government in the new PSC policy, which has been notified in February 2021. The basic objective, and I think this is very important also to understand, is the strategic disinvestment or disinvestment per se is only merely to earn the revenue for the, receipts for the government as a miscellaneous capital receipts for the government, or is it something more important than that? And I think what is important to look at it is the overall objective of the government, where Indian private sector has come of age. You have companies, Indian companies are capable not only in India but to go abroad and manage very complex things, very large projects. So therefore, I think the present context of the economy, when we really want to go for more of capital formation, the growth, and really looking at this decade as India's decade. Now we need to really see that what we need to see, we want to unshackle the investment opportunities. And one of the investment opportunities is from the brownfield. If you have a unit and you are able to, reach the economic and growth potential and job creation potential of that enterprise, then obviously we tick mark all the boxes. The employees gain, the economy gains, the productivity gains, and overall, the the structural reforms, they put you into a more sustainable and higher rapid growth path that we so much aspire. And these are the examples. If you really see Air India disinvestment, it's not that we have saved, the government has saved 20 crores a day with the taxpayer we're paying without actually looking at having any growth in mind. It was bare survival. And obviously this 20 crores per day would have risen to a much higher number as we go along, because there was no way the organization, it was highly constrained in terms of capital, could have actually used the opportunity that India has to offer. COVID had its problems, but we know that post-COVID, the aviation industry is rapidly, growing, and it is to grow on different fronts, not only in terms of and services, but the engineering, the ground handling, and several other things which are the linkages with the rest of the economy. And that is the billions of dollars of investments and the additional jobs and the better connectivity, because India is a hub, better connectivity with the world, better customer experience. All that will actually add up to growth and jobs in Air India and the general aviation market as well. Because there are several linkages, as I said, direct and indirect linkages of this industry. The second example I would like to give you, the privatization of Neelachal Ispat Nigam Limited, which has fetched bid value of upwards of 1.5 US dollars for a plant which was completely closed for 2 years, where net worth was a minus 3,000 crore, and the workers hadn't been paid for 2 years. They had overdues of 350 crores of employees' dues. Now, all that has changed when the whole thing has been handed over in the month of May. And now, we are not only, the work is on right now as we speak, with probably 4,000 people working day and night to not only bring that plant into the closed plant into operation, but also simultaneously the new plans to make an investment. So in this decade, in maybe next 7-8 years, we are looking at $10 billion of investments in Neelachal. And you can imagine the spin-off which will come, not only as a matter of direct employment, but indirect employment. And potentially, we are looking at Kalinganagar to be one of the probably most cost-effective steel making hub in the world, with 20 million tons, 18 to 20 million tons of capacity at one place. So this is what actually the strategic disinvestment can potentially do if it goes well. So it's not merely, now incidentally in Neelachal Ispat Nigam Limited, government received nothing because it was basically, I think, 6 PSUs which were there. So obviously their problems, I think, have been sorted. They got the reprieve, they got their resources. Disinvestment receipts of the government do not show anything. But this was something where we have, it's like, creating an investment opportunity of $10 billion. This is where I would say that the strategic disinvestment needs to be looked at. Whether it will actually, it will lead to more productivity, more sustainable jobs, more this thing. Then in that case, we need to be more efficient, technologically nimble, take right decisions. All that we believe are more forthcoming in the private sector. So therefore, we should really look at it. Disinvestment, this is more from, less from the fiscal angle, but more from the angle of reforms that it can bring. Similarly, I'll give you a third example of Paradeep Phosphates, where government has exited completely with about 19% of the share, which we had from 2002 disinvestment. We were retaining a part of equity, and we have released this stake through the IPO. Uh, Fortunately, this IPO also went through successfully, and this completely we have exited. So there are many ongoing transactions are there. A very important aspects that we have fairly, because one thing we have to understand is this is coming after 20 years. The strategic disinvestment by way of privatization, we have to learn a number of things because a lot of institutional memory has been lost. Also, the times have changed. So we have to internally increase our capacity building also and do some legal changes. For example, in case of demergers for the government company, it's an important thing because a lot of CPSCs have got land at very, very important places, which is important as a real estate. Now, to bundle it with the operating companies, neither the bidders would be interested because that will be very costly to, sort of, and secondly, it's not necessary as well because, you can't really load real estate into operating companies, as you know, that you have to be nimble. So, and their value can be much better discovered if they are demerged, they are separated. And in listed companies, obviously, there are challenges also because it's time take. You have to create another company, and then you have to take. But some of the important points which have been sorted in terms of a stamp duty on demerger, which would have led to a double stamp duty, not only at the point of sale, but also the point of demerger, which would have dissuaded the state governments and the central government entities to actually doing these demergers. So there have been a special dispensation been brought in under the Stamp Act. There has also been a greater amount of clarity under the system across the administrative ministry is that we need to really take up that as a parallel activity so that we can push it faster. So some of the key ongoing transactions have these demergers either done or in advanced stages, and following which I think we would be able to invite financial bid. And so we would proceed with some of these disinvestments there and all that. Now, IDBI Bank is an important thing which cabinet decision has been obtained, and we have been working at it for quite some time. This is also the first of its kind transaction where through a bidding route, we would be, actually privatizing a bank in the real sense. Although called a private bank by the RBI, both the LIC and government put together have about 94% of the equity. So it's always perceived as a public sector bank. But now that the bank has come out of the PCA, is going on, looking up, we have a potential that this could be also the first case of actual bringing in a private partner there. And the expression of interest, we are working at it and will be issued soon. So the lastly, I would also like to point out the dividend aspects of our stocks. I mean, we have, as you know, we have more than $350 billion of market cap. We have listed CPSCs as well as the listed banks and insurance companies. It's very important that the minority shareholders are respected. They are brought into the scheme of things of the both government as well as the CPSC management. So PSCs regularly have been rewarding the shareholders through dividend. There is a consistent dividend policy in place. They've been asked to interact regularly with analysts and investors to share information, obtain feedback from the market. DIPAM itself wishes to keep engaged and safeguard interest of minority shareholders because everyone has to be together and we have to balance the interest. It's a balance the interest of raising fiscal resources and balancing the interest of minority shareholders because a fine balance is involved. If you are just too quick and you are just too quick to garner resources from the disinvestments through market sales, obviously you will also create a price overhang, which which will not be in the interest of minority shareholders. So I think there is a nuanced approach to disinvestment, which is in best interest of not only the Indian stock market, Indian stock, but also for the PSCs. And that is what we intend to do, and that is what we have been intending to do, we have been doing. And I think the results are also positive. If you really see in 2021, we had the BSC CPSC index as well as the Nifty